What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily stream, 10:30 a.m. Eastern time every day. I think this is going to be the time slot. This is going to be the home for a while. We were dancing around with 10 a.m. and 10:15. We're going to be doing this 10:30 slot. So I'm happy to have you here. I love how many people are showing up for the early show, basically pre-stream, talking. I get to talk with you guys. I get to read, guys and gals, and read your comments. I just want to tell you how much I appreciate each and every one of you. Dimple Paw says he thinks it's a trap. So does Objectively, Real Reality Objectively thinks it's a trap as well. Red Elephant says we are going to dump. Good morning to every one of you. How are you feeling? Throw a 1 in chat if you're feeling grateful. Throw a 2 in chat if you're ready to jump off a bridge into water because you're on vacation, not for anything negative. But big love to every single one of you. Thank you for being here. My name's Kellam. If this is your first time, I can guarantee it's not going to be your last time. Make sure you're following me there at my handle. And of course, if you have not yet, hit that like button, hit that subscribe button, ding the bell, because as I said in the pre-stream, we're going to be doing a lot more content. We're going to be doing some trimmed down content taken from the live streams, as well as just independent shorts. And we're going to be having some sections. Let me know how you guys feel about this. We're going to be having some shorter produced content each week that's fully focused on newbie questions, fully focused on what the hell is Kelly talking about? He thinks he's breaking it down, but I have no idea what he's talking about. And I forget that. I forget, what the perspective is from somebody that's newer in these markets. And all of us have been there, even myself, where I'll be watching a stream and I'm trying to participate, but I'm also like a little lost. But I'm like, I know I need to be here because I believe in crypto, but they might as well be speaking another language. I was there, and I'm sure some of you might be there now. And we're going to be making it a point to be bringing you more digestible content for the beginners as well as delivering that alpha. This channel is all about bridging that gap from beginner to pro. We're going to be doing it. We've got somebody that holds very hard, a very hodl harder kind of person. He's actually sitting in the room. We'll introduce him at some point this week, and many of you will know who he is. He's a wonderful guy. But I want to talk about what's going on in these markets today. So let's go ahead. First off, if you're watching anywhere else, thank you for watching wherever you're at. But make sure you head over to youtube.com/@BitLab Academy. This is our channel page here. Hit that subscribe button. Join us in our community. And then, of course, if you haven't yet, make sure you head over to the BitLab Academy Twitter page right here at Academy BitLab. You see it, you read it, type it in correctly. Make sure you're following the correct person. Look for that gold check. Look for that hit logo. Join the right page there. And then, of course, you can follow me here at Kelly Kellam. You can also see all my information, boom, right there next to my body, right at perfect eye level, nipple level. So, everybody, I'm feeling good today. Woke up early, took my vitamins. I've been taking some vitamin D and some magnesium and some turmeric. And you know what? When we need an edge in these markets, it's not just about how solid am I with statistics and price action and patterns. No, you also need to think about how you're taking care of your body. Are you getting enough rest? Are you nutritionalized? It's not a word. What's the word I'm looking for there? Do you have healthy nutrition? Do you have the proper vitamins and nutrients in your body? You got to get that edge anywhere you can. Because remember, when you're trading in these markets, and I actually want to incentivize and encourage, most of you probably shouldn't be trading. If you do, you got to do it. You got to build your strategy. But the point being is, if you are engaging in these markets, and all of us are, why? Because we're all degens. The goal here is to get you out of that degen sort of practice and figure out ways that you can build strategies that you can look at these charts, pull these up and say, okay, I have a strategy and I have a risk management approach as well that can help prevent me from losing money over time and stack my wins. Part of that also is, what's your strategy outside of these charts? Because if you come into these charts tired, depleted, angry, frustrated, too happy, too sad, all that affects you. And when you are in these markets, the second you enter a trade, you are actively participating with the world's best. It's like saying that you want to play basketball tomorrow, and instead of practicing and shooting by yourself, like the second you start playing, you're playing with LeBron James. That's essentially what you're doing in these markets. So you got to do everything you can to make sure that you're in the right headspace. So let's talk about what's going on here. First off, we got a number of things we want to talk about. Of course, the death cross. What does that mean? Why is that it going to affect anything? Well, let's do some historical analysis on it. Also, what the hell is a death cross? In addition to that, what's going on with this pump that we had? It's a pretty decent sized pump. But when you look at it zoomed out like this, can you see the pump? Tell me if you can see the pump. I can't. Nothing's changed. Nothing's changed other than really tickling people's sentiment to get them involved. The question's going to be, can this turn into something larger? Meaning, will there be a follow through? Will there be volume? Will there be price out? Will there be buyers coming in to defend any price action if it does come to the downside? Shout out to Alexander G. She says, keep it up. She's got a, I don't know if that's an avocado or there's avocado doing curls there. And thank you for the $5. I appreciate you, darling. Thank you very much. And you know what? Zeus Gash says he reported another Kelly impersonator on X yesterday. There's only one. There can only ever be one Kelly Kellam. Again, if you make sure you are following, I'd ask all of you to do it. Now, I've had about 10 people message me in the last couple of days that there's been, I don't know if there's just a bunch more fake profiles that got created or what. Make sure you're following the correct Kelly Kellam. This is how it's spelled, Keloy, Kellam. But we want to talk about Bitcoin price. We want to figure out what's going on. Are we in position? Are we out of position? Should we be in position? Should we be out? What's our strategy and why? We're never, ever going to know the true full reason why price does what it does. But what we can do is we can stack the probabilities in our favor based on the underlying metrics that signal the strength and the volume and the basically the actionable sentiment that we can read in the charts that can give us some foreshadowing as to what is more likely or less likely to happen so that we can take advantage of that. And we're going to be wrong regularly. When you trade, when you invest in these markets, you have to be okay with being wrong. The goal is to stack the data so where you can find probabilistic outcomes. And while you're managing your risk, you're okay with taking losses as they come because you're stacking the probabilities in your favor. And when you are managing that risk, you have those stop losses in place. You have strategies to help prevent you from losing big. So you could take several small losses in a row if you need to. There's many professional traders out there that I know that their hit rate is only like 20, 30%, meaning they're only winning 20 or 30% of the trades, which means they're losing 60 to 70% of the time, 80% of the time sometimes. But having healthy risk management and being able to take the swings and being available to the data in the chart so that your trades and your setups that you're really trying to take action on, when they do hit, they will absolutely crush the losses that you had. Now, of course, nobody wants a 20% hit rate. Everybody wants a 100% hit rate. So how do you deal with that? Well, that's what we talk about on this channel. So let's continue on and look at what's going on here. Here we are looking at the daily. I want you to notice here, if we hide all the lines and everything, turn off the indicators. First thing I want to talk about here is this death cross. What is the death cross? Death cross is a 50 simple moving average and the 200 simple moving average. Here we're looking at the daily, and essentially what a simple moving average is literally, if whatever the number is, say 50 or 100 or 111, doesn't matter what the number is. It is that number of candles on the time frame you're looking. So if you're looking on the daily, the 200 moving average, this slower moving average here, which is purple, it's saying that it's taking the average, just simply the average of price over the last 200 candles, AKA each candle is a day because we're looking at the daily chart. So this is looking at the average of the last 200 days. That's a simple moving average. An exponential moving average, because you can also have a 200 exponential, 200 EMA. And that essentially is weighting more heavily the candles that are more current. So it's basically front end loading it a bit. So it is still an average of the 200, but giving more weight to the the candles that have more recently happened. So the averages, those moving average lines move a little bit faster. In this case, when we're looking at the death cross, we're looking at the 50 simple moving average, SMA, also known as, and the 200 simple moving average. And what we're talking about here is we have a golden cross right here, which is when the 50 comes up and breaks through. See how this is below the 200 moving average? It breaks through this 50 moving average, breaks through the 200 moving average, golden cross. Essentially what it's signaling to you, and all these things tie together. And by the way, this is why it's so important. If you haven't yet, head over to bitlabacademy.com, get involved with our courses, and we have so much content in here, and we talk about price action and candles and moving averages and indicators and chart formations and on-chain analysis. We break all this stuff down so you can understand it. You may not think you need to know how to do this, but you can't run a marathon before you learn to tie your shoes, right? So let's all commit in whatever capacity, wherever you get it from. All of us need to commit, even myself, to continuing our education and diving deeper so that we can have a little bit of an edge. And what we're, at least not even the edge. At this point, we're just talking about a foundation to build off of. But in this case, what this is saying is this 50 moving average swings up and it's breaking above the 200 moving average, essentially telling you that a shift in trend has been established. In this case, we just already saw this moved quicker because moving averages are what? They're lagging. What does lagging mean? It means they're slower to give you the data than what you're going to see in the price action. But what you can how you can utilize that is these moving averages are telling you that, yes, we had a price action push up and it's endured long enough. It's been held high long enough that this moving average, which lags behind the price, is also turning up and in fact has now crossed bullishly, golden cross, over the 200 moving average. Now, conversely, and we see what happened here. That's actually, I have it all drawn out here. I marked out all the different points, both bullish and bearish, getting golden crosses and death crosses on this chart. And what you can see is once this happened, yes, price action came down and tested. Where did it test? Some people, depending on what your technical analysis style is, some people would say that this came down and tested this descending level of resistance of this falling wedge here. But you can also see this also came down. It actually broke that level. Where did it bounce? Right on the 200 moving average. Pushed up. We had this basically and somewhat endured bullish first half of the year until literally right about July, right in the middle point of the year. You know, I mean, look at this. This is essentially where we topped, and now we're coming down. And with this price action kind of stalling at these levels, stalling, meaning it did not break through that $32,000 level. This is pulled down, and we're seeing that the 50 moving average has been pulling down too. And what do we see right here? We see that the 50 moving average has crossed below the 200 simple moving average, saying there's been not only price action to the downside, but it has endured. It has held with the downward price action, bringing that 50-day moving average down, so much so that it is bearishly crossing the 200-day moving average. So what does this mean? Why the hell do we care? That's what we're going to talk about here. And we're going to be talking about FTX. We're going to be talking about Gary Gensler. We're going to be talking we're going over so much today, everybody. So I just want to see, we got 132 people in the room. We got 73 likes. Blasphemy. Everybody hit that like button, hit that subscribe button, ding the bell, keep this going, keep this channel alive, baby. And so what we can see here is what we want to do, and this is a lesson for any indicator, for any signal, for any data point that you're looking at on any chart. When you see a news metric about this or a news article, or you see some talking head like me or somebody else bringing something like this up, what you do, identify it in your chart, and then let's go ahead and zoom out. And let's see how price action has interacted with that signal being shown. Is it something like it's so scary like it sounds? Death cross. That means price is going to go to 8,000. I don't believe that's the case. I do think there's probably going to be a little bit more downside. But let's see in the context of the market, what price action did is the result of both the golden crosses and the death crosses over the last few years. So let's zoom out here. So I got these marked out all the way back to, I basically stopped marking back here on April 2014 because it gets very choppy over here. So we'll just look at this. We'll just look at this forward. So we have a death cross here. We have a death cross here, and this was in the middle of a downtrend. because the price action had already come down. And this was so high. We had such a divergence. We had such a separation, a disparity between this 50 moving average and the 200. It took some time with price falling before this came down. In fact, price was already down 53% before we got that death cross. Now, remember, this is also a younger market, meaning this is early on in Bitcoin's life cycle. This is 2014, 4 or 5 years after the launch. Much smaller market cap. You want to even just fathom this? Look at this. Look to the right. This is when price action came up to a little over $1,000 and then dropped back down before we got the death cross to the death cross came in right here, actually, and price was $381. So there was a lot less monetary energy needed to move this price, and there's a lot more volatility. In fact, I mean, even from, I mean, this is a bull market. A little bit of a retracement, consolidation, and push. And this is the middle of the bull market. And we still got, look at that, 1,000% gain, 10x from the middle of the bull market on. We don't see that. Will we see it again? Maybe if we get all the ETFs at the same time and every major, Apple, Amazon, Google, they announce buying at the same week that the ETFs go live. Maybe we'll get, ridiculous, basically outpace the growth in this bull market cycle than we have in the past. And I do think it's possible because we did get a little truncated in 2021 with the Chinese mining ban on Bitcoin, which kind of dampened how high we could have gotten that cycle. But who cares about that? All we can do is plan for what's happening with price action now. So we got death cross here. We did, and I just want you to notice, when we got the death cross, this is essentially just before we had this sort of final push down before a pretty sizable relief rally that came up 100%, okay? So one of the things I want you all to do when you're doing historical analysis of data on your charts and signals and how they relate to what price action was doing, one of the things I want you to do is not just see every time this signal does this is the effective rate of that. This is how often the hit rate is of that data signal. I want you also to look at the context of where you're at within the market cycle, because Bitcoin, we've talked about it so much on this channel. Bitcoin has a regularity in cycles about just under 4 years. We have the halving. Some people think it's because of the halving. We have global liquidity and the Chinese 10-year. Some people think it's that, like tech dev. In fact, he talks about it ad nauseum. If I'm actually going to come over to here, tech dev. I love his charts. I'm going to try and get him on the show. But this is it right here. So is it because of the halving, or is it because, look at this. Each time this happens, look at the Chinese 10-year, the Dixie, and Bitcoin price. This is Bitcoin price, and this is that data with true strength index here. Here's the Chinese 10-year note rates, and look at this. Each time this happens is when we're getting massive bull trends. So the answer here isn't that it is the halving or it is the Chinese 10-year. The truth is, it's probably a combination of all these things. So when we're doing our analysis and we understand that we have this regularity of bull market, bear market, consolidation, halving, bull market, bear market, consolidation, halving, bull market, so on and so forth. So when we're looking at this, doing our historical analysis on a death cross, on MACD crosses, on any of these things, where are we at in the market cycle as it relates to the halving? So let's go ahead and pull up the halving. Okay. So now we have our halving dates. And I want to just look here. So we have a death cross here. This is basically near the first third of this bear market, from all the way down over here. So the question's going to be, because see, we have a golden cross here, which should be so bullish. Golden cross, what happened? Price dumped after. So you have to take these things, I don't want to say like a grain of salt, but every signal that you utilize and that you dig into when you're trading Bitcoin, you're trading any asset, every different signal, think of it like you're making a dish, right? And your dish is profits. What do we want? We want profits. When do we want them? We want them now. That's right. So at the end of the day, every data point that you are utilizing is an ingredient. And some high profits sometimes take a lot of complex recipes and a lot of ingredients. And patience is a big one of those. Your strategy is a big one of those, but then also utilizing all these different data sets. So you can see that while a death cross might be bad on like the NASDAQ, which is going to, once a trend sort of shifts, it can really have an effect and signal that there could be a lot more downside. But with an asset like Bitcoin, it's not going to act the same way as other asset classes would, especially because it has its own sort of cycle. So looking here, this is a consolidation phase right here. And the argument is everybody's trying to figure out, are we somewhere here? Or if we look at 2019, look at all these death cross, bullish, golden cross, death cross, golden cross right after the halving. See this right here? So the question is, where are we at in the cycle looking here as it relates to where golden or death crosses would be in previous cycles? And we can see how the price interacted when those things occurred. So we had a golden cross followed by a death cross. But I want you to notice here, look at this. You see this? Death cross, and price action basically was just barely range trading here. Now, there was a little bit of a sell-off. And it was just a whopping 7% sell-off. So is a death cross that bad? And then we get a golden cross right after it. And that one endures all the way up. So where we're at here, let's look at the 2019 into 2020. So this was the bear market bottom, 3,100. Excuse me. Get the golden cross after we've made quite a bit of headway. I mean, look at this. This is golden cross. Price was already, when this crossed right here, price was already up 72%. Very similar to kind of how we were, similar to in terms of the architecture, the layout of this is in terms of where we were earlier this year. But we got a much bigger push up all the way to 339% push up. We did not get that the first half of this year. We got about an 85%, 90% push up. So there's a little bit of differences here, right? And some would argue that it's kind of like a combination of this cycle and this cycle, the average of the two. In fact, if we come over to the rational root, and I've showed you all this before. Actually, I can pull it up right here. I can never remember. Oh, got to go to his page. The Rash. Can I not spell or something? There we go. Sometimes you just, there's a better, let's see if I can find it really quick. Somewhere, here it is right here. So here's the current cycle, this pink. This is the 2019 into 2020. This is 2014, 2015. And look at this price. I mean, look at the separation of these two previous cycles, where the price was, going into a halving, basically on the same day, sort of where it was in relationship to coming into a halving. And look at the price. Price action has basically been relatively holding some fairly, almost like a mean average between these two last cycles. So coming back over to the Bitcoin price, golden cross, push up, come down. We have a death cross. And this one was interesting because we also have this to contend with right here. What is this? This is a global economic shutdown, March 2020. World shuts down for COVID. Now we did get a death cross here. Price pulled back a little bit. It wasn't a significant pullback. It was, I guess it was about 20% there. And then we have another death cross here, but this death cross happens after the low because we had this massive sell-off of all markets when the economy shut down. So this was after the low is in. So the point being here, yes, a death cross can signal there's more downside, but it also is signaled after the low is already in only for the price to go up, and away from there. Man, I feel like I got something in my throat. So where we're at right here, Golden Cross here, after the Golden Cross, the price pulled back 13% and then ended up resulting in a 36% rise after this sell-off was bought back up and come back up. So when we're looking at this, I want this to be bullish. I want it to be bullish. But when we remember, as I just showed you, when we zoom out, can you see that pump? Not a thing has happened. The only thing that's happened in reality, where is CoinGlass? The only thing that's happened is we had about almost $70 million in longs liquidated on the drop we had. And then we had about 30 millions in shorts liquidated, getting a short squeeze. So people are getting washed out in both directions. Both directions. So let's step out of the charts for a second. We're going to come back to this. We're going to do a bunch of TA, but I just want to just touch on a couple topics in the news today that's, giving us some, I don't want to say clarity, but it's giving us some idea about what the context is kind of shaping the narrative of the market today in the last couple of days. Well, FTX, everybody's worried about this. FTX fiasco, will Bitcoin survive a $3.4 billion crypto dump? It's going to be very interesting to see how this happens. So market tremors from FTX potential liquidation. Monday's cryptocurrency market landscape echoed concerns predominantly driven by uncertainties surrounding the liquidation endeavors of the now bankrupt FTX exchange. Bitcoin, the flagship cryptocurrency, witnessed a sharp decline, diving more than 2%. This was those longs getting liquidated yesterday, and a notable dip. It touched 24,964, so we made it below 25. It was pretty impressive. We did hold there. In the U.S. Morning trades, a level unseen since mid-June, though it managed to recoup some of the losses, setting a proxy. So this is already old news because we all know that we pumped up above 26,000. So when there's about $3.4 billion in crypto assets, I think the largest portion of that is Solana. And then there's a couple hundred, 400 or 500 million, I believe. I can't remember. Don't quote me. In Bitcoin, and then another, I think, around 200 billion, 400 or 500 million, and then about $180 million in Ethereum. Yeah, so right here, the alarm bells rang loudest for Sol. Reports CoinDesk highlighted FTX offers and blah, blah, blah. Valued at $1.16 billion of Solana. Woo. That's crazy. So 560 million in Bitcoin, and then, a lot of other micro cap, illiquid micro caps. So it's going to be interesting to see what happens if this does get liquidated. There's some speculation with the always loud and never actionable Justin Sun, the creator of Tron, saying that he was contemplating potentially buying off, a big portion of this, if not all. But then there's questions about whether or not he even has the capital to do that. So that's something I'm just like shelving. I think that's just a speculative thing. Him getting his name in the news is all he's really trying to do, I think. Bitcoin bounces back. This is what we're talking about. 26,000. Okay. Could we have seen it coming? Well, let's talk about that. Why has Bitcoin price bounced upwards? Renowned analyst Skew provided technical perspective, blah, 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 blah. Textbook short squeeze. This is what I was talking about the other day, and I've talked about it a lot in the last 3 or 4 months. When we come over here to CoinGlass and we look at this liquidation data, you can also get an indication of when the market is too hot in one direction or another. Because even if the price action is in a bearish trend, and it looks like there's going to be follow through to the downside. If you come up here to open interest right here, you can see how much open interest is here. But more importantly, you can look at funding rate. Now, who gives a hell about funding rate? I'll tell you what is important about this. The data that this signals is the funding rate will be positive if most people that are trading futures and derivatives and leveraged positions, think of it that way. If they're trading longs, it becomes expensive to trade longs. And the shorts, you can, if there's a, for instance, if there's, say there's a position that it's like everybody knows this is about to drop, Remember, we don't know it. We're only thinking it. But in your heart, you're like, I know it's going to drop. And everybody's like, yeah, this level's, and everybody's is basically taking short trades. Then you'll have a negative funding rate. And what that means is that the people that are holding short positions have to pay a funding rate, because think about it. If I'm trading $1,000 on 10x leverage, that in essence means I'm borrowing $9,000 from the exchange to trade, and you have to pay a funding interest rate to them if you're on the same side, the popular side, essentially. This way it helps keep the market balanced. So that way not everybody's going short. So if everybody's going short, then you basically become incentivized if you want to go long, because the shorts will pay your funding rate. You'll get that fee. So you can look at this metric, understanding all those things, but you can also look at it in the most simple form of saying, okay, in this case right here, there's a lot of shorts, not a lot, sorry. The funding rate is negative. So this is saying that there's shorts in the market. But when you start seeing a very large funding rate in one direction or another, then it can give you basically an idea about where the futures market is trading. And this is another way to look at it right here. So you see right here, all these longs. Why do I know it's longs? Because the funding rate is very positive. What happens? Hurt the most people. Boom, price comes down. And then we have, we're starting to get, it's kind of mixed bag here. But then, yeah, this is starting to even out. It's starting to even out a little bit here, which is what we want to see. Let's look at it on the 5 minute. Yeah. So it's not gonna, I thought this said 5 hour, not 5 minute. So just be aware of that. Now let's come back over to this chart here. And the reason I wanted to talk about that is because it's going to kind of inform a little bit of what Skew, this analyst, is talking about in this article. So diving deeper into Skew's analysis, he pointed out a clear divergence in the cumulative volume delta of perpetual contracts or perps, basically leverage contracts, with the actual price. In trading, a divergence between CVD, cumulative volume delta, and price can signal a potential reversal. What have I told you all on this channel so many times? Volume is one of the best signals that you can use in this market, because it's an actionable thing that shows you as close to real time as possible, not lagging like momentum and money flow and moving averages. Volume is showing what is actually being traded. And when you see interest come into certain levels, and in addition, not only to the interest, what I mean by interest, people actually trading that price level, that lets you know what's going on. Especially if you come over here, let's turn on the volume here. If we double click on the BitLab trading stack, if you double click on the BitLab volume, you can come over here to inputs, and you can do source, you can do open interest, but what was I wanting to do? Oh, right here. So showed volume delta. And so when you show the volume delta and you have it on up down, you can see how much volume was buyers and sellers at each level. So you're getting a clearer picture at certain price levels where there's been dominant buying pressure or dominant selling pressure. You can also just look at it right here. You just do total. You just see what the total volume is, and it will basically how much volume was traded at that price level. Similarly, you can go just to the delta, and that tells you what the volume was and if it was predominantly buying or selling. So there's a lot of different things you can do with volume, but the point here is he's saying that volume, the cumulative volume delta was suggesting there's a little bit of divergence as to what was going on at the level, suggesting that there may be a swing in price, at least an interim reversal, which is essentially what we're seeing right now. While sellers were trying to push the price below 25,000, the cumulative volume delta indicated that buying pressure was mounting. So you're basically watching somebody fill their car up, and then somebody asks you, do you think they're going to drive it? Hell yeah, I think they're going to drive it. They just put gas in the car. That's essentially what you're seeing here. So the spot market, where assets are bought and sold for immediate delivery. Remember, spot markets are like when you're buying on Coinbase and you basically put in $10 to get $10 worth of an asset. That's known as a spot market when you're not trading leverage. We're showing signs of a bullish structure change with prices gradually moving higher. Skew suggested that the culmination of these factors led to a short squeeze where those who bet against the market, aka short sellers, you're wanting the price to go down to make money, are forced to buy back into the market to cover their positions. This is what we mean by short squeeze. Now the question is this going to be a short squeeze that's going to see follow through and continuation to the upside, or will price get rejected? Will this be a bull trap and price come back down? Skews analysis essentially highlights that there was a bearish sentiment with many traders betting against Bitcoin. Underlying indicators were hinting at a potential bullish reversal for traders. The immediate goalpost squeeze is to reclaim 26,000. We've reclaimed that. So let's kind of come over here and look at this. Let's go to the 4 hour. I think there was an absolutely perfect call here on the BitLab trading stack. I mean, look at this. Look at this. Bearish signal, bearish setup. And we had the RSI come up and start breaking down. We had the momentum wave was still a little bit lagging here. But remember, this is why it's important to utilize not one part of an indicator, not one unique signal. You want to build your recipe. You want to build your ingredients to stack your probabilities. And in this case, looking here on the 4 hour, we zoom into this. We got a couple things here. We had the high volume candle come up. Why? Because this is teal. Then we get the yellow candle, means stopping volume. So stopping volume is our setup. We see the bearish signal here suggesting that there's some underlying algorithm stuff that we put in here, reading about what's going on with price action as it relates to candles and candle closures and breaking certain levels. And there's a number of different things that have to happen for this to come up. So we have the yellow candle here, stopping volume, suggesting this is not. We also got rejected at the order block right above us, part of the BitLab volume, letting us know liquidity zones that price may come back into and potentially get rejected at. So we got the rejection, we got the yellow candle, we got the bearish signal here, and maybe you don't take this trade right at this moment. You see the setup is there, so then you can execute a strategy on this. And on candles breaking below these two candles lows, that's what would have been my entry. Because, okay, it's all well and good to have the setup, but until price action starts showing signs of an actual reversal, you get that. So now similarly, come over here. What do we get? We have high volume selling pressure. We have the purple candles, a lot of interest in selling. And what do we get? We get that yellow candle, stopping volume. So there's our 1. We got the bullish setup. There's our 2. We got the triangle on the bottom. That was a little late on this, but just depends on what your strategy is. So we see this right here. And then on this candle breaking to the upside, your question here is, what is your goal? What's your why? Are you trading 15-minute candles or 4-hour candles? Are you trying to trade to where you get in and you get out? In this case, on this, my trade on this would have been, I got these candles which say high volume. Let me look for stopping volume. Okay, stopping volume. Stage is set. Okay, support. I have the bullish setup right here. Now, we also have see these lines here? These are auto-populated from when you get these high volume candles. And so on the break of this zone right here, this line you can see right here, that's where my entry would have been. And that would have taken me, I did not take this trade because I was not sitting at my computer when it happened. That's about a 5% move. And this is a great zone because we have the order block right above us. And what do? We front run targets so we don't end up not having our orders filled. So having exits set up, one about where these lows are, because there's no telling if the price was actually going to break through that. And then your secondary, at minimum always 2 entries, minimum always 2 exits. So safe exit here, so you take some profits, and then your other exit would be front running a little bit below this order block region. So we still got a lot of green here on the dashboard. Will it follow through? Let's see what it looks like on the 1 hour. So on the 1 hour, look at this. High volume, stopping volume. High volume, stopping volume. And we're getting these consolidation periods afterwards. Now, question here is going to be, is all of this red on the dashboard here on the bottom right. Is this letting us know that there's a setup, that there's weakness coming into this, and this will likely test back into this? The question is going to be, if we do pull back a little bit, which is okay, even if this is going to continue going up, it's okay for price to pull back a little bit. In fact, you want it, because that's how you take your opportunities. If you are having a bullish trend, push up, you don't buy the push up, you buy the sell off, push up, sell off, right? So in this case, if we do get a pullback, where is it going to go? Well, on the BitLab trading stack here on the, we can see here on the BitLab intelligence, we have this EMA ribbon here that's finding a little bit of support on. We have this 20 moving average right here. In essence, what I'd really like to see happen, if we do get a pullback, is I'd like to bounce above these highs here. Now there's a wick here, but we have, see all these levels, rejection, 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 rejection right in the zone. If price action does pull back, if there's going to truly be a change of trend here and start working its way up, I want to see Bitcoin hold above basically 26,000, but 25,930. If we do come back into this zone and we lose this level, what does that say? What does that signal to the bulls that are still there? It signals, what the, right? People are starting to get very frustrated here. I just need to make sure I didn't miss any super chats. Okay, no, I didn't. So, as it stands right now, what do we have? We have a liquidity wash. We had a liquidity washout to the upside, liquidity washout to the downside, consolidation, another little bit of a trap here, back down, trap to the downside, back up. Now, I mean, they are shaking. I got to say it. They're shaking bitches off. Okay. Don't be one of those. You need to make sure that you have a strategy in place. So when you see these little pumps, you're not jumping in, trying to catch it continuing up, only to buy the top to have it reverse. So I do think there's still some work to be done. This just looks like they're trying to figure out the narrative. I still do think that we're going to come down into the 23.9, 23.7 sort of zone, because this is not convincing yet. In order for this to be convincing to me, we'd need to take out this high here, 28,000. Because even if we get up into this zone, we're still, I mean, there's still quite a bit of a, sorry. There's still quite a bit. Look at that. I didn't even notice that. Come on, damn mouse. Yeah. So this is kind of coming right into that zone. Wonder why we stopped there? Well, it's below this high and rejected at this level. Now, if we take this out, then again, I'm going to be very careful about taking any trades. If I'm going to buy something that I'm going to hold until 2025, then I'm not worried about anything I buy right now in terms of Bitcoin, Ethereum, and some of the top alts. But I'm not really doing that right now. I'm still thinking that this price action is coming down a bit further. So did I get a list from the mods? Let me see. Yes, I did, from Karen. Thank you very much, Miss Karen Swigart Harris. It's time to dive in and do some TA. Let's talk about it. Let's figure it out. Let's see what coins did you want? Render? Yes. I'm not going to do Elon, just so you guys know. I don't like doing meme coins on here. ETH, Quant, HBAR, Link, MATIC. We haven't looked at MATIC in a while. Let's start with MATIC, and we're going to come back to Bitcoin. We'll do ETH second to last and then Bitcoin last, but we're going to do a bunch of alts here first. Let's look at what's going on here with the alt market. Who's got MATIC out there? When'd you get it? How long ago? What price level did you get this asset for? I love MATIC. I think it's going to do well. It's got so many partners. You guys understand how many partners MATIC has? It's literally ridiculous. If the internet worked for me. Okay, it's not working. Let's just do the 7 best. Here we go. 7 best, biggest partners. Is your internet working? Okay, screw this because it's not working. We're just gonna look at charts. For whatever reason, the internet is a piece of, you know what I was about to say. MATIC is it has got a lot of partners. Just know that. Disney, Adidas, I mean, I can't even remember it all. Here we go. Top 10. DraftKings, Adobe, National Football League, Starbucks, Adidas and Prada, Walt Disney, Meta, Stripe, Reddit, and nothing, of course. But you see, my point being is there's a huge number of I'm talking like top tier partnerships, and I do think that they're gonna have an incredible. That's interesting. Why did the volume get down there? Yeah. There we go. So MATIC, let's go to the daily. Let's see what's going on with baby girl MATIC. Yeah, so falling wedge, broke down below it, came back into it, fell back down. We're looking like we're attempting a double bottom right here. The question is going to be, are we going to hold? This is only a wick. And now we have candle bodies fully closing in where this wick was. And we actually have broken to a new low. So if we break below 49, 49.06, 49.10, I do think, I think we'll probably go to the lower side of this order block here, 40, 41, 42. And if we lose that, then I do think we're going to be, there's going to be some more pain down here into the lower 30s. But at the end of the day, it shouldn't scare you because we just saw that list of partnerships they have and how much they're building and how big their ecosystem is. So this to me would be a dream to be able to get in the 32. Let's go ahead and put a box there to be able to get in, in this sort of region right here would be, I'd be like, take my kidney. Yeah, but so this is not looking like it's trying to have a rebound. In fact, let's kind of come over here. Let's look at the Dixie's still pushing up. In fact, not only is the Dixie pushing up, we also have a golden cross brewing on the Dixie with the 50 moving average and the 200. This is on the daily, but what I wanted to show here was the dominance, Bitcoin dominance breaking out. We talked about this yesterday. Falling wedge. These likely break out to the upside. So is this signaling some of this interest that's coming into Bitcoin? Is this going to start showing some more capital flow going into Bitcoin over other altcoins? So when we're looking at MATIC and you see that Bitcoin had this pump and it's like, well, why is this looking so weak? Because right now is not the altcoin season sort of mentality. Right now, it's like the liquidity flush outs in both directions, people getting liquidated, people, questions about the dumping from FTX and all these things on the table are suggesting, even within the degen crypto community, it's a little risk off right now, which is why you're seeing this, basically working its way down to this zone. So I am looking for lower. If this does bounce, then I'm seeing a more than likely rejection at about 57 marking here. I'm going to delete some of these. So I see it, if it does come up, I'd see a rejection somewhere below this, probably even likely at like 55. So we're going to have to keep our eye on that. MATIC's not looking too hot if you want to be a bull right now, but God dang it, it looks good for the next bull market. Why? Because of these prices going down, rock bottom sales, it gives you an opportunity if you can be prepared. Now, if you buy somewhere up here and you're just feeling unconfident, it's everything you do is a decision you have to make. This is not financial advice, but knowing where the partnerships are going, and say you don't have any capital left, then sometimes you just have to understand what the fundamentals are of your asset and trust the process. But remember, anytime you trade in this market, any investment that you make, you also have to be willing to lose. So let's look at HBAR. HBAR, who's out there? Who's the HBARbarians? I sold most of mine August 4th. When was that? August 4th or August 8th? I sold it somewhere about right here. And so that would have been 24%. I'm up 24% essentially. I did not have to take a 24% loss. In fact, I'm so excited about this. Same structure as that we were seeing on MATIC. This is suggesting some weakness, likely leg down. 43. This is basically this zone right here is where I think I'd be stacking up. I have to click on everything 3 times for it to work. Down here in the 40, 42, 43 range, I'd be stacking back into this coin. Now, if this does bounce, we're looking at a bit larger time frame today. We're looking at the daily. This does bounce. Look, this already did have a wick. Where did this wick go to? Right to the lows of this previous range. This is telling me it wants to go further down. So if it does bounce, then, you know, I mean, 49 testing, likely rejection, but this is telling me it's either going to consolidate a little bit or more likely than not work its way down to this 44, 43 level. ACS, somebody said, I don't even know it. What is ACS? Access Protocol? How have I never heard of this? It's too many things to focus on out there, I guess. Look at this. Stopping volume. Hey, this is a sexy chart. This is down and to the right. This must have launched recently. We're going to have to get a one sheet together, Alex and Brad Guidell. Access Protocol. I never heard of it. Maybe I'm just brain farting at the moment. But yeah, it looks like it's trying to form a base, and it's kind of in price discovery. Let me see. Is this on any other? Might be a bigger chart. No. Yeah. So there's not really any data. This is hard. I don't know anything about this coin, so I'm guessing this has a very small market cap as well. It looks like it's trying to form a base. It's kind of rounding a little bit. I'd be watching for, you know, wicks down to this zone down here, 00165, which is this 50 moving average, exponential moving average. This is held below the weekly VWAP here, and it's trying to hold on to this 20 moving average. But I do think this could very easily have a little bit of a liquidity washout. So again, I don't know anything about this coin. So let's see. Where we go. What is ADA? Are we going to get those prices we talked about, everybody? On ADA? Where are they at? Where's that chart I have? There it is. All right. Cardano. This is, yeah, this looks very similar to MATIC as well. Trying to hold this area at the 23.9, basically, just under 24, 23.7 to 23.9. If we lose that level, I think we're coming down here into the low 20s. Basically, pit stop here at 21.92. Why there? This is where the wick came down to here. What does it look like on another chart? Let's see if there's some confluence between different exchange. Yeah, see, same thing. This is a little bit higher, 23. So somewhere in the 22 cent range, I'm looking for, you know, probably one of the last amazing opportunities we're going to get on Cardano. And I think this is absolutely going to go. Man, maybe a band-aid. You said Cardano ADA makes you sad? Or Sadie. I don't know SADE is, but Crypto Crank says ADA is touching 12 cents before we bottom. Well, hey, here's the deal. I'd be so down with the 12 cent Cardano. I'd be like, I'd be financing some things. Yeah, I mean, look at giant order block right here. So the top of this zone right here, 17 cents. I do think if the price does continue working its way down, this is a very logical level right at the 18 cent mark, 17, 18 cents. And if we lose that level, maybe a quick liquidity washout. But 2 order blocks, you see how there's 2 different order blocks here stacked on top of each other? It means there's a lot of liquidity interest down here in the 14 to 12 cent range. What do you guys think? Do you guys think that we're going to, get a 12 cent Cardano? I mean, I hope not for the sentiment of the traders, but I hope so for those that are prepared, because your sentiment's going to be through the roof in the next bull market if you're able to get Cardano at 12 cents. So what do we do here? What do we do when we see something like this? This goes for MATIC. This goes for HBAR. This goes for all the coins we've been talking about today. Doesn't mean you just throw a Hail Mary pass and, you know, take a loan, a cash advance against credit cards and put a giant buy order at 12 cents. That may or may not work out. And it's in fact stupid to take on debt for a risky asset if you don't have other hard assets. You know, I did a post about that. And everybody's like, well, what about Michael Saylor? Michael Saylor's taking loans for 0% to 3%, very small interest rates against an asset that on aggregate, you know, has a 2x, you know, every year on average. So, and he has hard assets backing it. It's not his personal capital. He's not putting himself in a position to where he's not going to be able to manage life. Now, so what do we do? If this breaks down here, well, we see our levels. We see level right here, basically where we call it the 23.75. And then now we have the level at 21.87, another zone. And we have another zone down here at 18 cents. And then another zone down all the way down in this region. I would front run this probably around the 15-cent mark, because I don't think it's a lower likelihood we're going to get all the way down here. But if the price action does work its way down in here, you can get these order fills. You know, that's why, remember we talked about earlier, layering in and layering out, having multiple entries at different price points. And don't be upset if you have multiple entries and this one gets filled and then it drops. Then you're like, ah, damn, I'm prepared. Now I get this lower price also. And then say you buy here at 21.92 and then you also buy here at 18 cents. Then you get the average of those two prices. So then your average is somewhere in the middle here. And it's not a bad thing that you didn't get all of it at this level, because you can't know if price is actually going to get to all the targets you have. This is why you average your entries by layering those prices in and out. AVAX, what are we looking like at AVAX? Remember, I was telling you guys, I want to get a $4 AVAX. That'd be awesome. But that would be the top all the way over here, all the way back to September 20. But more realistically, we've got a couple zones here. If the price continues pulling down here, then we have this order block right here, basically the $7 range, 728 down to 650. So in this zone here, now can we get let's delete all these damn Fibonacci's. Okay, let's delete them and then add them. So we could do a couple things. We could take a option F Fibonacci. You can also come over here to the left and find Fibonacci retracement. And what we can do is basically mark out this range from this low to this high. And wouldn't you know it? Look at where price is right now. Let me turn that off so you can see it. It's right at the 1.382. So the next logical level down on this Fibonacci extension would be 816. And then look at this, 1.786 is right here on this order block, suggesting that there's a bit of confluence here down at 736. So is this going to be our best price for AVAX, or is it going to go lower? Well, we don't know that, which is why we set up multiple entries. So I'm going to mark this out just right there. The 1.618 is right there at 815. I think if this does come down, this will come down into the zone, more likely actually into the zone. So yeah, $7. I do it above. There we go. $7 region, 7 to 720. That's what I'm seeing. Seeing lower prices, even though, especially on the altcoins, as Bitcoin is pushing up and not having follow through yet. Now, if we break through this level on Bitcoin, we break through this level essentially that we've already tapped, 26,380, and we're able to push up. The next logical point to watch is this level right here, these previous highs. If we're able to clear this, it starts getting exciting. But this is not exciting at all. It gets minimally exciting if we break 26.3, 26.4, because then we're starting to break some structure. But again, we already had a pump back here that failed. So if we cannot clear this, there's nothing to be excited about. So as it stands right now, I'm still being a little bit patient with what's going on with the price action on Bitcoin. And I still have this target down here at the 23.8, 23.7 sort of zone. And that's what I'm seeing. That's what I'm feeling. I love each and every one. If you want to learn more about how to read these charts, how to understand what's going on in these markets, head over to bitlabacademy.com. Got all these different courses you can get involved in. We have the premium Discord with all kind of things in there. We've got the indicators. We've got everything going on. to make sure that you have the tools, the skills, the strategies, and the understanding of how to navigate these markets. So if you want to sign up, just click on that enroll now button right there, and that will take you to this page. BitLab Pro has all access to all the courses, a premium Discord, and the indicators. And that's discounted, by the way, about 30% every month because you bundle it. Or you can just get the courses in the premium Discord. Or you can just get the indicators, which is right here, indicators, BitLab Trading Stack, boom. And for all three of those, I extended the coupon code for a little while longer. Use Give Me 30, get 30% off your first month. But I love you all. Everybody hit that like button, hit that subscribe button, ding the bell. I'm going to be going over to Discover Crypto now, going to be doing some TA there, breaking down the thoughts on what's happening. And you know what? I think it's time to say adios. Adios, everybody. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Hit that like button, sucker.